All right, welcome to Mark's Trading, and today we're going to discuss finding great trend following trades. And this is a great video for those of you that often find themselves leaving too much gains on the table and not letting your winners ride long enough. So let's get started. All right, so before we talk about how to find these trades, let's talk about the basics of trend following. Number one, trend following is a strategy of probabilities. So we're going to have a lot of trades. Many of them are going to fail. We want them to fail quickly, have very small little losses, and those trades that are working, we are going to let them ride. We're going to take the capital from the trades that don't work, and we're going to go and apply that to trades that are just developing new trends. Number two, trend following is making a bet a new trend will develop, and it has not yet occurred. So unlike technical analysis and making trades with technicals, where a bulk of the trades have already been trending for a while, which are lagging significantly, trend following is different. It's making an assumption that a new trend is just starting. Number three, a great trend following trade will last 50 to 150 days. We shouldn't be worried or concerned about letting these trades ride as long as the trend is intact. And we're going to show you a couple examples with our proprietary models how to make sure it's still intact for the greatest amount of confirmation. These trades, we are hoping to look for 20, 30, 40, 50% gains. Then lastly, diversification. We need to diversify among sectors to have a broader approach. That is ideal. We don't want to be in one sector with 100% of our capital because we need to have a much broader approach. All right. Now, very simply, we would just want to highlight a couple terms in terms of risk and how we want to define those. So we want to talk about position size. We want to keep the position small enough where you won't get hurt on one position, but yet it has to be big enough to make a difference. Most professional portfolio managers, the optimal level is 2 to 3% per position size. Number two, industry size. Never max out all of your capital with one industry group. You're taking on too much risk. Anything larger than 10% to one industry group, whether that be semiconductors or something to that extent, it's considered pretty aggressive. Number three, sector size. Never max out all of your capital into one sector. Financials, technology, healthcare, whatever it may be. Anything larger than 25% of your portfolio in one sector is considered aggressive. All right, so how do we find the best trend following ideas? So the first thing I do in my process is very simply ask, is the S&P strong? Is it trending well? Why do I care? Because everything I trade is in the S&P 500. That means all those stocks have a high correlation. Those 500 stocks correlate 70% of the time with the broad S&P. So, number one, S&P has to be trending up, has to have a strong trend. Number two, at that point, I want to look at what sector is increasing in the greatest trend strength and showing some momentum. And then lastly, I'm looking at what stock is working the best in terms of trend strength and momentum within that sector. And that is the three-step process. Now, let's just go into how I actually find that. So for many of you that might be familiar with our models, these are trend following models. What we do is we grade a stock from a negative 100 to a positive 100. These indicators are then broken down simply from a 1, which is a strong sell, a 2 is a sell, 3 is a hold, 4 is a buy, 5 is a strong buy. I personally love finding a stock that has been weak, a strong sell. There's not a lot of people in that stock or investors in that stock, possibly a large short interest, and it quickly builds up in strength and turns to a strong buy. Strong buy we can see here is a 0.60 or the 5. Once that happens, we can get long that stock. A new trend is starting to develop. It's getting stronger. Once it maxes out at the strong buy, we then will look at our counter trend model, which measures the exhaustion. What we have here is when it moves further south, more negative, red, it means more buyers are stepping in, the stock's becoming more overbought. So again, in this case, we want the inverse to happen here from the rating value. And let me show you an example. Okay, so this is a stock we have here. The rating value was weak. It was a strong sell back here and was slowly building. This green was the counter trend, which means it was over sold. But it slowly climbed up to a 4, which is a buy. Some people will put a half a position on at that level and then wait till it moves to its 5, put the rest on. I personally just like to wait until it moves to a 5 and then just add. But then once we max out at the 100, I will then look at the counter trend for further confirmation. So what we see here is a stock that we want to get long, the rating value is increasing here and the counter trend is declining. Once we max out on the rating value, the counter trend keeps moving lower, more negative, further south. That means the stock is finding more buyers, more sellers are stepping away. This is where we get that parabolic move. As a trend follower, we want this parabolic move. We want to squeeze everything out of it. Now, what we want to do, unlike traditional technical analysis before the fact or after the fact, we want to be proactive. We want to sell before the trend breaks and snaps, because the more overbought a stock becomes and then breaks on a much more overbought level, it's going to revert and correct much more. So we want to be proactive, and as this becomes more negative and starts to stall and stop declining, we want to reduce our position and be proactive and take our gains. All right, so we're not going to go into any more about the signals here. Let's show you exactly my process when I wake up every morning, how to find the best stocks. All right, so here's the system. And what we have here is, the first thing I look at is the right side, the S&P model. If the S&P is increasing in strength, which it started to, I will say check, like it. I want to be in a positive long position in some stocks because the S&P is favorable. And we're at a 98 now, which is a strong buy on the S&P. It looks good. The counter trend really has not moved lower. That doesn't necessarily concern me that much, but I would like to see it keep moving a little bit lower for even greater confirmation. So the next thing I will do is I will then come in here to the midsection of the page, and I will look for the sectors that are increasing nicely. Now again, I will pick maybe 1 or 2 stocks in each sector. And so materials are working well, consumer goods. The only sector, even though energy is increasing, it's still not at a strong buy. I don't even want to play around with energy anyway, on a fundamental point of view. But let's take a look at industrials. Let's see if we could find anything here. All right. So today, industrials are weak. However, what I would be looking for is anything that has seen a nice increase on the rating value and a nice consecutive decline on the counter trend. All right, so that is the first thing that I would be looking at to find some of the best stocks within the strongest sector. Technology, same thing. Well, here's an interesting one. Microchip. It had a nice pop up to from a 47 to a 92 and has decreased fairly nicely as well. So that's one. Let's find something else that's been stuck at basically a strong buy but has declined nicely. Well, KLAC here has declined nicely on the counter trend. So I want to combine those two. And I'm going to and it's a strategy of diversification. I want to have a couple tech names that are really starting to show promise. I'm going to add to those positions, and I'm going to do that amongst some strong sectors. That is my initial look in just discovery of new potential ideas. All right, so the next video we're going to show you how we actually reduce exposure when we know it's time to sell. But right now, I just wanted to show you a video on how I find new ideas regarding on the stock level. All right, thanks. If you have any questions, come to the contact page and ask us anything you